purpose of this video is to answer kind of the next question that's been coming up a lot with these COVID mortgage forbearance plans. Just to recap, if you are somebody who has a federally backed loan, meaning Fannie Mae, Freddie Mac, FHA, and you do not have a COVID mortgage forbearance plan going and you need one because you're experiencing financial hardship, there are other videos on this page that you can check out to help you understand kind of what the options are and how to get one. If you are somebody who is currently on a plan and you're looking toward transitioning out, there are other videos that can help you understand what the different options are. Just to briefly recap, if you are on a forbearance plan and you're looking to transition out, there are basically 4 options that you can work out with your servicer to get you off of these plans and back current on your mortgage. The 4 options are reinstatement, meaning you pay the full amount that you missed all at once. Most people can't do this, but if you can, that's the easiest option, is to literally just reinstate the loan, pay what you owe. The second option would be a loan modification, which is a negotiation with your bank where they basically write you a new loan that modifies the terms of your existing loan. It gives you an opportunity to just resume making regular mortgage payments without having to pay the full amount you missed. Typically, the full amount you missed will get tacked on to the end of the loan, and you'll just kind of resume making payments with the amount you missed being coming due at the maturity date of the loan. That's what a loan modification is. That's option 2. Option 3 is a repayment plan. There is another video that talks about the difference between a repayment plan and a loan modification, but briefly, just to recap, a repayment plan means that you do not modify the loan, you do not sign a new contract, but you basically resume making your mortgage payments every month and you pay a little bit extra that you've agreed to between you and your bank. You pay a little extra every month until you become current on your loan, and then you just resume making mortgage payments. Like I've said in other videos, a repayment plan has to be in writing. You have to agree with your bank what that monthly amount is going to be, how much extra you're going to pay every month. That's not up to the borrower to decide. That's up to the borrower and the bank to decide together, and a repayment plan should be in writing. That's option 3. And then option 4 is called either a partial loan, or sorry, a standalone partial claim if you have FHA. For Fannie Mae and Freddie Mac, they're calling it a deferral. There's other videos getting into detail about what those are, but just briefly, they take the amount that you're behind and they kind of record what looks like a second mortgage on title. It's a non-interest bearing lump sum amount that becomes due at the maturity date of the loan. If you want more information about the deferral option or the standalone partial claim, watch those videos. But the purpose of this video is to help people understand, what do you need to submit? The short and kind of fast answer is we don't exactly know yet, but I just wanted to go through what we do know and kind of try and predict how this is all going to play out. So the Consumer Financial Protection Bureau, the CFPB, they have what's called Regulation X, and Regulation X has what's called an anti-evasion clause. What that means is servicers and banks typically are regulated in ways where they are limited in the types of loss mitigation options that they can offer if the borrower has submitted an incomplete package. So in non-COVID times, if you're a borrower looking to do a loan modification or some type of loss mitigation option, you need to submit a complete package. There are other videos on this page about what documents that entails and kind of how to do that. But servicers do typically retain the right to either deny borrowers or not move forward with loss mitigation if the borrower's package is not complete. That creates a burden during COVID times, right? Because there are so many homeowners who need to quickly be transitioned onto one of these plans. We don't want to go through another massive housing crisis. And so part of kind of the new federally backed regulations coming out is a way to try to ease up on that Regulation X clause, right? They're trying to tell servicers, okay, you can offer some of these plans without having a complete package. Right now, where we're seeing that applied to is to the deferments and the partial claims. So if you're someone who has a Fannie Mae or an FHA loan, and that standalone partial claim or the deferment is something that you think would be a good option for you, technically your servicer should be able to give you one of those without you having to submit a ton of documentation. Now, it's not super regulated what they are or are not going to request. So it is possible, based on your individual servicer, that they will request some documentation, particularly for the Fannie Mae deferral process. They will want to know kind of whether your hardship has been resolved, whether you have income coming in again. And so my guess is that there will be kind of maybe a minor amount of document requests coming. We just don't know yet. It's a little too early in the process. But overall, the partial claims and the deferrals may not have a kind of burdensome financial package required from the borrower. If you want to do a reinstatement, you only really need to ask the lender for one document, which is called a reinstatement quote. The reinstatement quote will have listed all the payments you missed, any interest, principal, fees, anything like that that you rightfully missed during your forbearance period will be provided to you on the reinstatement quote. That's the only document you need. The reinstatement quote will have instructions for how the bank wants you to wire the funds to them or pay them in some way. So you just follow the instructions on your reinstatement quote to pay them. But the tricky one right now is the loan modifications. So typically lenders require a relatively extensive and comprehensive financial package for the loan modifications. And we're not seeing anything definitive right now coming out saying you don't have to submit anything to get a loan modification. We are seeing something saying that lenders are allowed to approve a loss mitigation option without a complete package, but the way that that's being applied or whether lenders are actually choosing to follow that, it's still too early to tell. So my best advice I can give at this point is talk to your lender, make sure you ask them, hey, this is the option I want to pursue. What is going to be the required documentation? And I think what you can expect based on the regulations coming out right now is that if you're going for a deferment or a partial claim, the documentation will be very little or might be no documentation other than just a phone call with your lender. If you're trying to pursue the loan modification route, I would get the sense that lenders are still going to request a full package. If you are going to do a loan modification, watch the other videos on this page to understand kind of what you're going to be asked to submit, how to get your documents through the process and correct the first time. There's an article, a link to an article at the bottom of this page that goes over some of this in more detail. Make sure you check that out and keep yourself informed. Keep talking to your banks. Find an attorney in your state to run all of this by so you don't fall too far behind and end up facing foreclosure.